short selling is a niche. Maybe the universe of potentially good shorts is this big. As an activist short, we are a niche of a niche. So our universe of potentially actionable shorts is that big. So there is this difference. Now most shorts, so non-activist shorts, are out there looking for companies that are melting ice cubes, or where they're looking forward and they think that the fundamentals are going to deteriorate, et cetera. That's not what we do, and that's not what short sellers who specialize in looking for frauds and promotions, as well as heavily financially engineered companies do. So within this niche, and this would include some non-activist short sellers who also have the skills and the tools to look at these companies, we're there really helping investors understand what's going on at these companies, because there's this sliver of companies out there where managements are trying to hide the ball from investors. And whether it's from a legal perspective, fraud, or it's just on the right side legally, it's not technically fraud, but it's intellectually fraudulent. And they produce financial statements that obscure the economic realities of the business. So our role as activist short sellers, when we look at companies like those, is to try to unpack that and explain to investors, this is what's really going on with the company, and this is what's underlying the numbers. So for us, we're looking for things that we're generally looking backward. We're not taking that more conventional investing approach of what's going to happen in the future, because the future you can argue about. We want things that are provable and that we can prove now, and that's basically something that has to have already happened. So we're looking backward and we're saying, when the company printed this number, say $1 a share, is that really a good number? Or, well, it looks like 40 cents of that came from transacting with deconsolidated affiliates that are funded by debt. That's not a real business transaction there, so you should consider that EPS was actually 60 cents instead of $1. So that's the kind of thing that we do, and we add transparency to the market. So that's why activist short selling and the short sellers who really specialize in unpacking those deliberately obscured situations are important to markets.
With all of that in mind, has your approach, has your strategy changed over time? When you're doing this forensic analysis of a company, when you're looking for certain red flags?
Yeah, when you ask different activist short sellers, you get different answers. And I'm in the camp of screens don't tell us that much. I mean, we're usually looking for something that is too good to be true, something that's risen a lot, something that has a lot of fanfare around it. And then scratch the surface and see, okay, is there something odd here? Do they have a significant divergence between GAAP and non-GAAP earnings, or growing divergence? Does the income statement look nice, but the free cash flow statement doesn't? When we do a lot of transcript analysis, or we read transcripts. So a lot of times when we get serious about looking at a company, we'll print out 4 to 5 years of transcripts, start with the earliest, and then read straight through, and look to see if management's being overly promotional, or if there are some other things there that cause us concern.
With a recent position of yours in Manulife, I want to revisit it and talk about what you saw there. And this was really an event-driven position. But now it seems like that might be changing a little bit. What are you anticipating? What are you seeing? Walk me through what you've seen since you made that call back in October.
So yeah, Manulife was pretty interesting because it was this binary event. And we became aware of a trial that was just about to take place in Canada. And so the plaintiffs were effectively, it was a limited partnership. I mean, call it a hedge fund, but it wasn't really sophisticated like a hedge fund. But so a fund that was suing Manulife, seeking a declaratory judgment, meaning a statement by the court that the plaintiff had certain rights. And the right that the plaintiff was seeking from the court was the right to deposit unlimited sums into this account at Manulife that had a guaranteed return. And it was basically it was short-term money, so it had very short-term liquidity and a guaranteed minimum return of 4%. So if the court rules in the plaintiff's favor, the plaintiff's name is Mostyn, then Mostyn could effectively turn into the world's highest yielding money market. So it's binary. So if Mostyn loses, then this isn't a big deal. But if Mostyn wins, this could put significant pressure on Manulife's balance sheet and capital. So
We're talking billions.
yeah, I mean, look, if Mostyn were able to raise billions, which they can offer guaranteed return on short-term liquidity of 4%, you'd think that this would be a very attractive alternative, for fund managers to stash their cash when it's not being used. Then, yeah, they could potentially stuff Manulife with billions, and Manulife has to take a charge to earnings because of that difference between what it's able to earn and what it has to pay. So Manulife in its litigation, their expert witness argued, or one of the expert witnesses argued in a sworn affidavit that this could be catastrophic financially for the company. So therefore it could be a very good short. And the market wasn't aware of this. So the market, Manulife had not disclosed the existence of this litigation to investors. So we thought that this was an interesting information asymmetry here, and the risk hadn't been priced in. So we went public with the short thesis, and then what happened was, the company, it was a very half-hearted response, just kind of accused us of being short sellers and seeking to make money out of, off of other people's misery. And
it's a song you've heard before.
Yeah, exactly. But it's just kind of funny because it's like, since when is an insurance company in it for the good of the society? And, since when are they not screwing customers in some way? But whatever. So there was a little name calling.
Tell me how you really feel.
Yeah. So say a little bit of name calling, but then what happened? So this was in Saskatchewan Provincial Court. Saskatchewan was the province in which Mostyn is domiciled and in which the policy was purchased by Mostyn. 2 or 3 weeks later, the Saskatchewan provincial government suddenly promulgated a regulation that on its face appears to say that a policy owner may not pay more money into an account than is actually necessary to fund the insurance. So on its face, that appears to be a problem that would frustrate the plaintiffs. So the court still has not returned its verdict. By the time that regulation was promulgated, the arguments had already wrapped up. So we'll see. So you could have a decision where the judge doesn't take the new regulation into consideration, and if it's favorable for the plaintiff, then they probably end up back in court with Manulife arguing that the new regulation bars this. And so it's gotten more interesting, but it's kind of funny because we think of Canada as a first world country. And this is really suspicious in terms of the timing. Just 2 or 3 weeks after we made this a big deal, and the Journal followed with an article on the situation about a day or two later, that focusing on one of the people who put together the LP. So as soon as it got media attention, here comes this new Saskatchewan regulation. Coincidence? Hard to believe. So kind of an interesting insight into our friends to the north who, like I said, we tend to think of Canada as pretty first world, but maybe in some respects things are a little bit more clubby than we're used to.
Did that recent development bolster your confidence in the initial call on the company?
Well, assuming that this new regulation had something to do with Manulife behind the scenes, it would certainly seem to belie their public statement that they're not concerned about how the case turns out, and they're not concerned that whether the law is in their favor. So, yeah, it's a sign of weakness. But at the end of the day, did they just make the move that moots the whole issue? That remains to be seen.
But ultimately, you're still confident in the call.
Well, look, so what our call was, to be clear, was that we weren't taking a view on whether the plaintiffs are going to prevail or not, because under U.S. law, we feel that they would pretty clearly prevail. Canada has somewhat different standards of contractual interpretation. So, we worked on this we looked at this with Canadian counsel, whom we engaged, and it definitely passes the laugh test, definitely poses a risk, but under this one Supreme Court decision from a few years ago called Satva, where court's supposed to look at the factual matrix around a contract, that kind of seems like that could be an excuse for undoing bad deals by the party that feels like they shouldn't have done the deal. It was harder to say. So I was always clear, like, we don't know how this is going to turn out, but this is not priced in. and this is an issue.
So let's take that and shift for a second from Canada to China, where you're pretty well known. You've been described as one of the most hated men in China. So first off, is that a badge of honor, or is that something you take issue with?
Depends on who exactly in China is hating me. But yeah, I certainly at points in the past, the CCP, the Communist Party, I think reasonably senior leadership knew my name or knows my name still and was looking to kind of interdict our operations in China. So that's one. And then, yeah, there's a group of venture capitalists and kind of stock scammers, China Inc., let's call it, because actually most people think they're respectable guys, but I know better. So, and we're on the other side of stuff, and they don't like me. So, but those guys are billionaires in a number of cases, and I'm not. So they must know something I don't.
Well, you know a few things, and when it comes to tall education, that was a pretty good call on your end. You're going back to June, and since then we're down about 36%. Walk me through what you saw there, bring us up to date, and does this name have further to fall?
So what was interesting with TAL is that it's a much more sophisticated form of fraud coming out of a Chinese company. I guess backing up, if you see the movie China Hustle says that there are about 400 companies from China that listed, mostly via reverse merger, in the past decade, and that have basically gone dark, been delisted, et cetera. So, 400 or so stock frauds. I think out of the 400, I think only one Chinese company chairman has been imprisoned in the US, and that was a guy who was Taiwanese. So I think he was just unlucky. So nobody from China has ever been materially punished for scamming US investors out of tens and tens of billions of dollars. I mean, they basically just kind of sit there in China and I think laugh and give us the finger. And the SEC has tried to pursue cases where it's wanted to get working papers from the China affiliates of the Big Four auditors, and they get stymied as well. So this is a perfect situation where if you're in China and you're looking at the US markets and you think that you can use a company to defraud US investors, it's a heads I win, tails you lose proposition. Why wouldn't you do it, basically? Since nothing has changed to disincentivize it, with the more recent IPOs, we think a lot of those companies are frauds. Now, they're not frauds in the way that the first 400 were, which they would say we're doing 400 million in revenue and the real number is 4. These are companies that do real revenue, but probably the apologists' admissions would be that 20-30% of the top line is fraudulent, but they'll grow into it. And so anyway, when we looked at TAL, we saw some transactions where they were really trying hard to make their profit numbers. So they were growing aggressively, so they were able to grow the top line, but the problem is they weren't able to maintain profitability. So they started engineering these transactions that were fraudulent. So the first one that we've analyzed, they claim to have sold a company to an investee of theirs for $50 million gain. And then a year later or 15 months later, it didn't work out for the other company. They want to change directions. Okay, we bought it back, and they just canceled the $50 million in shares. So this was also non-cash transaction. So when TAL sold it, they received preferred equity valued at $50 million, which is complete funny money. And then when they took it back, that equity was just canceled. But TAL left a $50 million gain on its books. Well, the interesting thing is, the fact pattern to us first strongly suggested that this was totally contrived and that there was no intent to really part with the business. But then when we looked at it, we found that they didn't even sell the business. The business remained with TAL. They novated some administrator contracts, but they didn't novate teacher contracts from what we saw. They didn't novate student contracts. They didn't transfer ownership of entities. It was just designed to do the bare minimum amount of work, presumably to be able to say to the auditor, oh yeah, we no longer have this business, and oh yeah, now we have this business back. So that was the first transaction. Then there was another transaction with a business that they bought in 2011 called Dongfang Renli, or DFRL. So DFRL was an overseas education intermediary business. So Chinese students wanted to apply to research and apply to schools overseas, they would go to to DFRL. DFRL would help them with the research, help them with the applications. And so the DFRL would get paid up front, but it would recognize its revenue upon the students receiving their visa to go study at the school. So it wasn't a big business by any means for TAL, but TAL disposed of it and just disclosed that, oh, we disposed of this company to an investee. And then TAL also announced that it had made an investment in another company called Shunshun. And so Shunshun was also in the overseas education intermediary business. And so TAL then sequentially made these investments where it took big markups that produced in total, TAL got about $60 million in profit from this series of transactions with Shunshun. But here's the thing, DFRL was transferred to Shunshun. So TAL lied about the timing of its investment in Shunshun. It said it invested in December 2015. They actually invested in July 2015 and then transferred the business after they invested. Why the lie in the 20F? The lie in the 20F was probably so that they could avoid disclosing this as a related party transaction to their auditor and to investors. Because if it were a related party, then it would have received more scrutiny. So we think TAL always had control of Shunshun, the investee business, and that the transferred VFRL into Shunshun basically was there to give TAL a way to produce about $60 million in accounting profits. There was also a point in which when TAL bought an additional slug of equity, they bought it from an obvious straw counterparty. So the guy who'd been CEO at the time of Shunshun, company in which they invested, his wife set up a company in Fujian, an entity in Fujian, Fujian's like famous in China for the corruption. So set up an entity in Fujian. 2 weeks later, it received the equity from the CEO, and then it immediately flipped it to TAL, and then a month later, it deregistered. And so TAL claimed, they claimed that I think they spent a few tens of millions of dollars on that slug of equity, but I mean, bullshit. Either that amount of money never changed hands, or if it did, that shareholders' money, of course, I think it was diverted into the people's pockets personally. So I think the actual seller didn't really get nearly that much money, but this also, again, seems to us clearly contrived to generate fraudulent profits from a non-bona fide series of transactions. So there was a third transaction we also highlighted as well, First Leap. So that was the initial focus of our report. This company is a fraud, it's a real business, but committing fraud. And then we started getting into the fundamental issues, how we saw that the core business called Peyo was actually weakening, and this was really, we saw just, they had to increasingly attempt to cover up the fundamental deterioration. So that's basically where we are. The company never really substantively responded, and their response, the follow-up I put out to their response, I said it looked like, it was something that somebody banged out while sitting on the toilet in the morning. So I would argue they've never attempted to refute any of what we said. And it's pretty hard for them to. I mean, the evidence is pretty clear. We've got the documents, et cetera. The only thing that's in their favor on this one is the complexity of understanding it. What I just explained.
You need the cork board and red string.
Yeah, unfortunately, that might have just made for, bad TV. So
No. It's actually quite good, because what it does is takes us inside your mind, and we learn how you operate and think when approaching these companies. And it gives us understanding as how complicated it is to uncover the bullshit, as you put it.
Yeah, so it can be. So these are not the predecessor frauds. These are more complex. But I think there are a lot of them still out there from China.
Let's stay on the topic of bullshit. It's one of my favorite topics. With what you've seen with this company, when there's this much almost systemic fraudulence, does it indicate that there's more? In your experience, is it fair to say that there's probably more there that we don't even know about?
Yeah, and that's a point that I try to make. I believe strongly in the cockroach theory, and the reason for that is, once you've crossed a line, the line's there. In China, I really don't think most of these guys care about it, but they're aware that the line is there. So once you cross it, what's the point in not crossing it again? You've already done it, and so I think Yeah, I suspect there's a lot more there, but we talked about what we could actually quantify in this case and what was glaring to us.
So with the cockroach theory in mind, is it fair to say that this company has even further to fall from where we're at now? Would that be unexpected at this point?
Things like that are always, it's a tough question because we've had a little bit also in a way of a macro tailwind here or a geopolitical tailwind. So at the time we shorted Tal, or really the week before, I was at a Bloomberg conference and I was arguing that allocators of capital and investors should start thinking of China stocks listed in the US as sin stocks for the reasons that I already elucidated about the inability to hold anybody accountable for fraud and therefore the high probability it's still prevalent, but also because at the end of the day, these companies will act as agents of the Chinese government, even though they are nominally private companies, and that they are basically trying to obtain technology from the US for China's strategic reasons. So in making that point, I said the hawkish positions towards China seem to now be prevalent throughout most aspects of our business community, and really that thinking, it seems to have been adopted by a lot of people who interface with China in business on a daily basis, but it hadn't yet percolated into the capital markets. Everybody was still pretty bulled up on China. And so there's been this spillover effect, which was in a way driven by the tariffs or the trade war. So people thought, actually this is serious and this isn't going to be good for China equities. And so I think, so this high ground that was there in early June when we shorted Tao has really, has ceased to exist. So there has been somewhat of a tailwind there that's not idiosyncratic to Tao. So it's kind of hard for me to separate, out what has been idiosyncratic to Tao versus tailwind. I mean, what do I think it's worth? I don't know how much fraud exists in that company. I mean, we've been able to quantify it some. The other issue is it's what they call a variable interest entity. So, if you're a shareholder of the listco, it owns a subsidiary onshore, but that's not the operating subsidiary. It just has a series of contracts with the operating company over here. Operating company is owned by the chairman typically and some of his buddies. Under these agreements, the opcos are supposed to make periodic payments of cash flow or profit to the listcos. Now, here's the thing about VIEs. It's kind of funny, these China VIEs. If you can understand Chinese taxation, which we do have in-house expertise in that, and you analyze a given company's reported taxes, then you come out saying, well, if these numbers are real, then the VIE has never made a single payment to the company owned by the shareholders. So what we see every time we look at a China VIE is that from day one of putting the VIE packages in place, they are in material breach. And when I kind of put that back at the apologists, it's like, oh, Chairman so-and-so doesn't like paying taxes. Well, holy fucking shit, that's new. I haven't heard that before. I mean, but they'll excuse that. So now so if you're asking me what is a VIE that never made a required payment or, as far as we can tell, never made a required payment under the VIE agreements, that's also committing fraud worth, and it's in China where you have no recourse. I don't know, man, that starts, I start thinking of bagels at that point, but I know that, look, stocks go up if there are more buyers than sellers, they go down if there are more sellers than buyers. People out there will ascribe some value to it that's greater than that I ascribe. So I really don't know where the floor for it should be.
Bagels isn't zero.
Yeah.
Just to be clear,
Yes.
It's almost lunchtime. I just wanted to be clear about that. So I'm hearing words like bullshit and cockroaches and fraud, given the way China operates. Is it almost like they're looking at America and laughing at us, given what they can get away with? And if you agree with that, has President Trump's approach been correct at this point?
Yeah, I think that they have, especially in the capital markets. I mean, that's what we used to say when we first started doing this was, we've been a laughing stock. So going back to 2010, 2011, American investors had been a laughing stock within these circles in China because we were so gullible we'd believe any stupid story, and every question, that didn't have a real answer would just be answered with, oh, well, in China there's this thing called guanxi, and it's not what you know, but who you know. And Chairman Wang has a lot of guanxi. That is why it works. And people just like, oh, okay, yeah, he's really guanchinated. So, and they would just eat that up. And so they all thought that was funny because in a way it is just how gullible, how eager to believe it we were. So, then we went through this period where after we got active in this space and Citron got active, some other guys came in. I mean, we kicked the shit out of these things and we humiliated a lot of these company chairmen. And then it became, oh God, we don't want to talk about listing in America, the short sellers. But China did something very smart and strategic, which was they started cleaning up the problem. So how did they do it if these were private companies, frauds? I mean, a lot of these were complete zeros. Well, there were leveraged buyouts financed on the debt side by China Policy Bank. So China Development Bank was one of the big lenders into these things. And so a lot of US investors, even though these were VIEs and there was no real business there, a lot of US investors ended up getting paid and paid premia. So the Chinese understood very well that that could wipe our memories. And it did, because then all of a sudden, valuations started to rise again in China. And the problem that we have in the US is, we're stuck in this, long-term low growth trend. So everybody on Wall Street, who has more and more money to allocate thanks to quantitative easing, is, searching for growth. Well, China is really the only scalable growth story in the world, even though a lot of that growth is just, it's just purely juiced by debt. And then, of course, the companies are lying about how much they're growing. So having wiped our memories, or maybe I should say sort of anesthetized us, here come the valuations creeping back, and now here comes Alibaba. Everybody lines up around the block to subscribe to that IPO, and we're off to the races. And so this generation of frauds, less egregious than the prior generation in that the businesses are much more real in general, but they're still frauds, and they're also online. So a lot of them are online. So it's harder to catch them. But the thing is, when they start doing the things that Tal did, where Tal had scaled so much and needed to manufacture so much profit that it engaged in these transactions that when you really dig into them are obvious, well, that's when you can catch these guys.
Do you take Jack Ma's departure at face value? What you've heard about it? Do you think there's more under the surface there than meets the eye?
Oh, God. I mean, trying to figure out So I take nothing from Alibaba or China at face value. What could be, underneath the surface? I can't speculate. But no, I've never believed him. It's kind of funny that Alibaba was able to IPO to such fanfare, because if you go back to 2011, Jack Ma literally stole Alipay from Alibaba. And so his story was, so Alipay was the payments unit there. And so what he did was he just transferred ownership of Alipay to himself and I think some of his associates, didn't tell anybody. So you had board members from Yahoo and SoftBank, just did it. Months later, they discovered this somehow. And so then he said, oh, yeah, I had to do that because, Chinese regulations don't allow foreign ownership of payment processors. So, that's why I did it. Which, gray area there, but really, was that the catalyst? And, why wouldn't you have told anybody ahead of time? Because he did the very smart, a lot of Chinese I've done business with, they understand leverage so well. So let's, here's the proper scenario. We have problems. The Ministry of Finance is telling us that they're going to revoke the license unless we transfer this. Okay, I'm willing to transfer this. I'm willing to take this. How much should I pay? And then the board, the independent board member should say, well, maybe we need to run an auction process, and or we need to run a sale process, and maybe he comes back and for strategic reasons that doesn't make sense. But whatever it is, the company still owns it. He's going to have to pay more if he wants it. But in a situation in which, oh yeah, I took this. Yeah, I'll pay you for it. Yeah, you're not going to tell. By the way, you're not going to tell me how much I'm going to pay. I'm going to tell you because your choice is zero to between zero and whatever I'm going to give you. So that's not the kind of guy you want running a public company. And if that sort of person tried to become CEO, or let's say GE was thinking of hiring that kind of person, shareholders would revolt. So it's like we always give the Chinese companies a pass because we're like, well, things are different in China. And yeah, but not in the way that is good from the perspective of US capital markets investors.
Sounds like you're saying Jack Ma's full of shit.
Yeah, Jack Ma is full of shit. He is full of shit. I don't know when I don't know when he's telling the truth or when he's lying, but the point is, he's got a real track record of being a scumbag. So, hey, as far as I'm concerned, that should disqualify him as having any credibility whatsoever. But unfortunately for me, that's not the way that the markets in the world work.
If he were to be named CEO and chairman of another public company tomorrow, is that an instant short in your mind?
No, I mean, it's, shorting. So what we do as activists, we never shorted Alibaba as activists because so large and so complex. I mean, there are a number of arguments that were put out by other short sellers who are not really activist short sellers, or don't focus on activism, but have put these arguments out there as to why they think it's a fraud. And it's compelling. But at the end of the day, if you have more buyers than sellers, it goes up. And we're just not in the US right now. We're not at least as of early June, just didn't have enough of aversion to risk to care about these problems and to care whether it's a fraud. So in a more risk-averse environment, something like that could be a better short, but a really large, complex company like that, probably easier ways of getting traction.
Fair enough. So we've flown from Canada to China. Let's come back to the US. And let's talk about something that you're particularly passionate about now. You've been an outspoken proponent of the role that activist short sellers can play in keeping certain executives in check, especially when it comes to pharmaceuticals. Talk to me a little bit about what you're seeing right now that has you troubled and what you're trying to do to correct it.
Past few days that I've been in New York, I've been talking about the idea that as activist short sellers, that we can openly short companies purely for moral reasons, that we can say to longs, you should sell this company because this company is toxic to society. I'm going to explain how. Nobody's done that previously to say that this is purely a moral short. When it's been done or attempted, it's been put in the wrapper of the regulator is going to wake up after 15 years and do something about this. And a lot of long investors feel that's hollow because regulators act on only a percentage of companies that they could or should act on, and when they do, it usually takes a while. So those arguments about the regulators don't move investors. But when I was thinking about this and looking at some of the truly egregious examples of companies that we've had in recent years, so one of them was Insys Pharmaceuticals. The thing is, when you read about these companies in the media after it's clear that they've, in the case of Insys, bribed doctors to prescribe a highly addictive, even for highly addictive opioid to people who would not have qualified for that to receive that prescription, bribed doctors to prescribe it. People got hooked. People have died. So read about that. It's usually the way the media explains it is, well, this was in the pursuit of corporate profits. But the reality is that these are not one-off discrete events. The common thread is really the lifeblood of these events, and that is the capital markets. So in the case of Insys, the former CEO made over $50 million net selling his stock. So in the case of American Addiction Centers, which was another problematic company where the company and its former president were indicted for murder for a death that occurred at the facility. I should disclose that the judge dismissed the indictment, but I think that AAC was a sufficiently bad actor. He made over $21 million selling his stock, most of it after the indictment was announced and he left the company. So what I'm getting at is that long investors are providing the financial incentives for this kind of bad behavior. So what I think as short activists we need to do is when we see an Insys, rather than saying, the FBI is at Insys and they're investigating. We say this is what they're doing. Now, if you as a major investor or you as a sell side analyst with a buy on it, if you don't change that, okay, you're helping to keep a bid under the stock. You are giving them financial incentive, in this case, or in case of Insys, to kill people. Don't think that your hands are clean. Now, before I told you this, before you were on notice, I understand. But now that you know, you have to act. And if you don't, you, Mr. Sell-Side Analyst or Miss Portfolio Manager, I'm going to start naming you publicly because I want people to know. I want your kids to see this online and come home and ask you, hey, is it true that you're somehow enabling this company to do these horrible things? And you can have that conversation. Now, people might say, gee, that's kind of harsh, but
if people are dying.
Well, if people are dying, and look, this is coming from somebody who has had innumerable, venomous things written about him on the internet. My kids are not quite old enough to get online, but obviously they will in the next several years. And I'm happy to have the conversation with them and explain it because I know that I don't have a problem at the end of the day. But can these other people say the same thing? So that's what I think as short activists, when we see these truly immoral companies, let's just drop the talk about the regulators. Okay, let's go right at the heart of the issue and let's tell investors that they should get out of this and stop giving these guys a bid for their stock. And if they don't get out of it, let's start saying, hey, I talked to Joan Smith over at XYZ firm. I showed her this information. She's aware of this, and she didn't take the buy off. In fact, she raised her target price. This is not, this is reprehensible, or this is deleterious, whatever adjective you want to use it, and put that out there. So I think we can open up a new front here and really target the most toxic companies in our markets by doing this.
You mentioned one. Are there any others on your radar that fall within this bucket?
So when I was at the Case Learning Conference yesterday, I gave examples of 3 companies that are subject of activist campaigns by other short activists. And they haven't couched them in these moral terms, but I think that these potentially could be, they're already battlegrounds, but they potentially could be battlegrounds where we start talking about the moral dimensions of continuing to own them. One of them is Medifast, which is multi-level marketer. It sells meal replacement shakes and powders. So an activist who published on that had tested some of these and determined that lead and other heavy metal content there was much higher than it should be and was dangerous. Company had, kind of a pretty terse response to that. Another is Health Innovations Insurance, HIIQ, or High IQ. They sell insurance, short-term insurance. The accusations there are that they are scamming their customers. Their customers think they're getting much more comprehensive coverage than they actually are. And if those allegations are correct, and that's been the subject of 3 separate short seller campaigns, activist short seller campaigns, and currently being investigated by 42 states. So I'm sure that's normal. So if those allegations turn out to be correct, then I think that rises to the level of immorality because it's not just that you're taking money from people, but you're also narrowing their access to healthcare. So you could really be messing with people's lives. And then the final example that I cited is called Acadia Healthcare, ACHC. And so this is a roll-up of inpatient behavioral treatment facilities. They treat kids as well as teens and adults. And the activist who published on this, he published links to a number of news articles that show, 5-year-old kid died in a van in custody, I think a 10-year-old kid died, number of deaths, abuse by staff. And the crux of the short seller case there is that when they roll these companies up, they borrow money to do it. So they buy facilities and then they cut staffing costs. So the staffing cost ratios are apparently, according to that activist, much lower than they should be. And they jam in more beds. So you've got fewer people to provide care. You've got more people to whom to provide care. And this really resonates when you look at what private equity has done to, say, Manor Care. Washington Post last weekend ran a really good article a couple weekends ago about, I forget which PE firm, but when they acquired Manulife in 2007, they extracted all the cash out of it they could. They sold the real estate and leased it back. So they turned an asset into debt. I mean, the cash was gone because it went into the PE owners' pockets. And then after a few years, they were struggling to service their debt. So they started cutting costs. Patients were, it looks like, according to the Washington Post, patients were being neglected, deaths resulted. And that sounds like that's similar to what the activist in Acadia is alleging. So if that's true, I mean, that's not acceptable. So those are three companies where I think we could see, and if the activists are correct, we could see this focus on the morality of owning the shares. In the case of Acadia, the banks that lend money to Acadia to roll up facilities.
I don't think anyone would argue that.
And I don't have positions in them. So
thank you for but that all being said, I don't think anybody would argue that in America we have a broken healthcare system, that we have a corrupt healthcare system, perhaps even fraudulent. Of everything you've accomplished in your career as an investor, would it perhaps be the greatest accomplishment for you if, as a short-selling activist, you could somehow change this industry and make it better and make it fairer? Is that something you've thought about?
Well, look, I don't, I think it'd be delusions of grandeur for me to say that I can change that industry.
But you're trying.
Well, I want to pick off, the way I think about it is ourselves or other short activists picking off the really bad apples. And hopefully that would have a wider spread effect. I mean, I guess the way I'm thinking about it right now is I'm thinking more about changing maybe it's not that slight, changing the culture of investing. So investing is inherently an amoral activity. Okay, it's, if I think this is going to go up, I'll buy it. If I think it's going to go down, I'll sell it. But the amorality of investing, I believe, is increasingly leading to immoral outcomes. And why is that? I think there's some big picture factors that we have to look at. So technological supremacy has devolved from the government to the private sector last decade or maybe the late 90s. Net, the government doesn't understand what it's regulating. Private sector has more power. Then also, humans, my observation is that we invent and innovate far faster than we're able to adjust to our creations. And so we don't understand the risks and how to manage those risks. And so whether we're talking about financial derivatives, offshore drilling, nuclear power plants, what have you, we create things that we don't understand. And when you look at where where our base is in terms of the power of the things we've created, mistakes here have tremendous implications. So I believe that the private sector is more powerful over our lives than at any point in modern times because of the factors that I've just mentioned. And when you want to look at the implications of that, one of the things I cited in my presentation was, I think in 2017, there were about 63,000 overdose deaths in the US from opioids and heroin. There were 58,000 soldiers killed total, American soldiers killed total, the entirety of the Vietnam War. This is a huge number. And we can trace a not insignificant portion of the blame back to Purdue Pharma and its unwillingness or inability to understand the potential for abuse of OxyContin. So when you look at that, we don't live in the world that Benjamin Graham lived in. This isn't a world where we can or should or can be amoral about these allocation decisions when certain behaviors are potentially so far over the line. I think as investors, we need to change this culture and bring morality into it. Now, the question is, where's the line? Yes, that's a subjective question. I don't think that investors right now, since we're starting from this amoral standpoint, I don't think that they're ready to move to the point where they'd say, well, if it's a business that's financially preying upon poor people and their lack of sophistication, then I'm going to dump it. That would be great, but I don't think we're there. So I think that when we're talking about businesses that are companies that could really do material harm to people, not just financially, that's where I think most people can agree is over the line. And healthcare is great for that sort of thesis because you have companies that you have innumerable healthcare parasites. I mean, they're either ripping off individuals, ripping off the system, or both, but they're also narrowing access to healthcare. And that's fucking with people's lives. And so I think that's an area to look to really find these companies and try to rein them in. And yeah, it would be great to be able to just take some of these bad actors out of the game. I don't know if it's something where, the Hydra, where a new head would pop up, or if you could really change the game, over the long term. My experience with the China frauds and the short-term nature of investors' memories is not encouraging in that regard. But since we're in an environment where monetary conditions are tightening some, then maybe things would work a little differently in this case.
Well, if your track record is any indication, it should say that some of these companies should be a little bit nervous with you targeting them. So I'm interested to see how these things play out, and hopefully it spurs some good and some positive change.
Yeah, let's hope.
But with your track record, which I mentioned, I wanted to drill down a little bit on your career and what you've accomplished. As far as your trophy case, is there one particular move or one particular decision that you made that stands out amid the rest? Is there sort of a Jackie Robinson steals home moment that you've had in your career that you like to highlight?
Well, the initial decision to do this, honestly, this was a pretty, so to my knowledge, at that point, nobody had put out the kind of research report that I put out. So what was going on then, 2010, I was living in Shanghai. I'd been out of the investment business for 9 years. And I'd started the first self-storage company in mainland China, and I was just trying to keep that afloat. And I came across a fraud from China listed in the US and put together 30 some odd page report exposing it as a fraud. And it was a company called Orient Paper. So I was very plain spoken. Orient Paper is a fraud. It has raised and stolen tens of millions of dollars. They claim to have acquired XYZ for $5 million. In reality, most of this money has been stolen. Nobody would have paid more than $500,000 for it. And this type of report, just hadn't existed. And so here I was. I didn't have, at that time, much money to short it. I'd blown through my personal savings in order to get that self-storage company off the ground. And I'd spent about $15,000 of hard research costs on this thing. And I'm really wondering, I'm like, okay, I've got $2,000, maybe I'll buy some puts. Is this worth it? What am I doing here? And but then I was fond at that time of thinking back to risky business and that line that Tom Cruise's friend told him, which is, Joel, sometimes you just got to say, what the fuck? And I felt like, look, I don't have anything to lose here because I've got this self-storage business that, it's not making me money. If they want to take it from me, then maybe I'm better off. So, there's a power in having nothing to lose, and or sometimes there's a power in having nothing to lose. And so I just went for it. And the next day, that stock was down as much as 55%, which far exceeded my expectations. And I was scared shitless. And I'm living in China. I thought maybe it's going to tick down a few percent, but that's how this business was born. So it certainly, people tell me, like, oh yeah, I've heard about you. They think about Sinoforest, but a lot of people either haven't heard or forgotten about Orient Paper. But really, that first decision, what's my upside? I didn't really see, maybe maybe I'd get some consulting gigs for banks who wanted me to diligence the companies. Before I realized that they were all frauds and the banks didn't want to know that. So yeah, I didn't see a lot of upside, and of course there was potential downside. Like, I'm living in China and they're going to send guys after me, or who knows, maybe get tied up in litigation. So that was really, that was the seminal decision that everything to date has flowed from.
Is that true? Were you kind of looking over your shoulder as living in China? Were you afraid of what was going to happen as a result of that?
Even before that, I had something I was fond of saying with to other expat business people, other expat entrepreneurs who agreed with it. I said, you're not truly doing business in China until the construction workers show up and threaten to kick your ass. And I'd already been through that. So shortly, I went to visit Orient Paper shortly before Chinese New Year. And so there was this construction firm that I had employed briefly the prior calendar year that coming up on Chinese New Year, they were stiffing their employees. So what they did was they told the construction workers, and this is not uncommon for construction companies in China, like, well, I can't pay you unless I can collect these receivables from so-and-so and so-and-so. And we didn't owe these guys any money. But anyway, they figured, well, here's a white guy. He probably will, cave in and, just, I don't want any trouble. So they sent the construction workers to my office and I told them to go fuck themselves. And they were calling me on the phone and trying to harass me. And so I was already looking over my shoulder. And then I worried that when I went to Orient Paper, I'd seen too much and they realized that I was onto them. So then I was doubly looking over my shoulder because I didn't understand how this company had gotten there. This looked a lot to me. So I grew up on Wall Street in the 90s. And in microcaps, there were a lot of mob-backed stock scams. So I was wondering, is this U.S. organized crime meets Chinese organized crime? So are there mobsters who might come looking for me? So yeah, I really didn't know the risks. And once I published, Jim Cramer is on, is on his show saying, when somebody called in, asked about Orient Paper, saying I must be a fraud, and got all these people writing horrible articles about me or blog posts on Seeking Alpha on thestreet.com, and people sending death threats and posting my father's address online and saying, let's go down and give him a piece of our mind. It was a pretty freaky time. So
at that point, do you call the FBI? What do you do? How do you keep living your life if your life's being threatened? You're trying to do your job. Your family member's address are being posted. That's a wild existence. How do you go on? How do you keep doing what you're doing with all that in your mind?
So this was the initial thing that happened. So a few days after we published on Orient Paper, my wife and I decided to get out of China for a bit. We needed to do so anyway for at least a month pretty soon so that we didn't become subject to PRC global taxation. So we'd been living there almost 5 years. So went to the US and it was calmer there and really tried to think about what to do. But at the same time now, I was getting inquiries from main portfolio managers at all of these serious hedge funds, and everybody wanted to sit down and talk. And so it's like, wow, there really is a business here. And by the end of the month in the states that I took, I was looking at two options. So I knew that there was a business here, identifying at least Chinese frauds and writing research reports exposing them, or writing research reports on them. The question was, did I want to do that publicly and expose them and pursue this activist short seller model that I didn't know existed prior to my publishing? Or do I want to get a handful of subscribers and collect fees and run a much lower risk of litigation and regulatory backlash? And that would have been the calmer life, but I felt like this was the right move. It was a combination of things. Yes, I felt it would be more lucrative, but I also knew that litigation would be a cost of doing business. So, that it takes a lot of time. But there was also this element of, I want to expose these companies. Like, what good does it do anyway to tell a handful of hedge funds this thing's a fraud? If nobody points out to the market that it's a fraud, then really, who cares? The stock can go up. So I felt like I did want to expose these guys as well. So that's why I chose the path that I did. And after about a year of doing that, I took a step back and realized that issues that really frustrated me in the first iteration of my investment career when I was on the long side, the conflicts of interest and lying by managements and how they used, I felt like they used sell-side analysts. Those issues, really are, they're what the heart of allowed these Chinese companies, these frauds, to list in the US. But those issues have enabled a lot of non-Chinese companies to also do things they shouldn't be doing in terms of their financials, whether it's fraudulent or just intellectually fraudulent. So realized this business, it can be global. So my business, really what I depend on for this business to work is that people will not stop doing the wrong thing. So if people stop doing the wrong thing, then you know what? I can shut down and I'll be a long-oriented investor. But so long as they don't, then there's a business for me to do.
Well, Carson, it's been an absolute pleasure hearing from you. And as we close here, there's always one question I like to ask any guest I speak with. Is there anything that I haven't asked you about that you want to mention?
No, it's been pretty comprehensive.
I think we've kind of covered the whole world here.
Yeah, it's the world that matters.
Yeah, well, in the world where you can make some difference.
Yeah.
So I really appreciate you coming on and giving us the time, because I know you're a busy man, but it's always great to hear from you.
Cool, thank you.
And be careful out there.
All right,
All right.
you too.
Thanks so much, Carson.
Cheers, thanks.